Okay, so the whole world has gone completely wild for AI. But is this the next great technological revolution, or are we just watching the biggest financial bubble in history inflate right in front of us? Today, we're going to dig into this using some fantastic analysis from Feng of Freeze Fund. Let's get to it.
This really is the multi-trillion-dollar question, isn't it? I mean, you look anywhere, and AI company valuations are they're astronomical, soaring into the stratosphere. But here's the thing. Is any of this growth real, or is the ground just about to crumble beneath our feet? And believe me, that is not an exaggeration. Feng just nails it here. This whole thing is moving faster and with more intensity than any productivity revolution we have ever seen in human history. It's nuts. And that speed, that intensity, well, that's exactly why we have to pop the hood and see what's really powering this engine.
So you know the old saying, right? To get to the truth, you've just got to follow the money. So let's do that. Let's trace this river of cash and see what's really fueling these headlines.
All right, first up, we need to talk about this massive paradox that's right at the heart of the AI boom. Because on one hand, you've got these unbelievable valuations. But on the other, the profits? Well, that's where the story gets a little murky.
Get this, just 7 companies, you know them, the Magnificent Seven, they're now worth more, combined, than the entire economic output of a country like Japan, or Germany, or the UK. The only economies bigger than this little group of companies are the US and China. That's it. And there's a reason it's these specific companies. They own the whole stack, right? The cloud infrastructure, the mountains of data, and of course, NVIDIA's got the chips that make the whole thing go.
And wow, is that value concentrated? Think about it. Those 7 names now account for almost a quarter of the entire US stock market. A quarter. This is the kind of financial power held by so few players that we've really never seen before.
Okay, and this right here, this brings us right back to that paradox. With all this insane valuation, AI still hasn't really cracked the code on a proven, profitable business model. One that actually makes more money than it costs to run. So if it's not profits, then what on earth is fueling this inferno?
Well, to solve that puzzle, our first big clue is this absolute flood of cash that recently washed over the entire globe. And all that money had to go somewhere.
So let's rewind to around 2020. To stop a global recession because of the pandemic, the world's central banks, especially the US Fed, basically just turned on the money printers. We're talking an injection of something like 12 times trillion dollars of new base money into the system. Just poof, created. So what is base money? Think of it as the starter fluid for the economic engine. It's the raw cash that gets everything going. But here's the really critical part. That money doesn't just sit in a vault somewhere. Nope, that 12 trillion, that was just the beginning of the story.
Because of this thing called the money multiplier effect, that cash gets loaned out, then it gets spent, then it gets deposited in another bank, and then that bank loans it out again. And the cycle just keeps going. So that initial 12 trillion, it didn't stay 12 trillion for long. It ballooned into almost $50 trillion just sloshing around the global system. A literal tsunami of cash.
Okay, so picture this. The world is literally swimming in cash. We've established that. But that leads to the next big question. Why did so much of it end up funneled into one very specific place? US AI companies.
Well, what happened next was kind of like a global game of chess, but with trillions of dollars. You had investors looking at Europe and getting nervous because of the war in Ukraine. They looked at China and saw risk from strict government policies and U.S. sanctions. And right at that same moment, the U.S. starts raising interest rates, which basically turned it into a giant magnet for all that cash looking for a safe home with good returns.
So in this incredibly high-stakes game, where does the money go? It goes to the most compelling story. And that story was US AI. It was this promise of a brand new technological revolution. It was exciting. It was the future. It was just the perfect narrative for all that money to chase. And that is how you end up with these eye-watering valuations, even without a clear path to profit.
So this massive fire hose of cash creates what you'd call a classic bubble dynamic. And if you look back through history, well, a pretty worrying pattern starts to show up.
Let's take a little trip back in time. Look at the dot-com bust in 2001. Or the peak right before the 2007 financial crisis, or even that post-COVID boom in 2021, you see a clear pattern. These huge booms, they all have a habit of ending right after one very specific thing happens.
And as Feng points out, it's this: the boom usually ends right when the biggest, hottest private companies in that field start rushing for the exits by going public with an IPO. So now think about what's happening right now. We're hearing all this chatter that giants like OpenAI, maybe even SpaceX, are getting ready to IPO. That historical alarm bell? It's ringing pretty loud.
This is a textbook example of something the famous investor George Soros called reflexivity. The idea is, it's like everyone is on a crowded boat and they all suddenly decide to run to one side to get off. It's the rush itself that makes the boat tip over. We saw this play out perfectly during the dot-com bubble, right? A whole stampede of unprofitable companies rushed to IPO, and that itself became the signal that the party was over. The act of everyone trying to cash out at once becomes the very thing that triggers the crash. It's a self-fulfilling prophecy.
Okay, so that sounds pretty bleak, but what if a bursting bubble isn't actually the end of the story? Feng offers a totally different way to frame this whole thing. It's a more optimistic take that sees this moment not as an ending, but as a crucial transition.
So he argues that these big tech revolutions always unfold in three distinct stages. First, you get the core technology itself. Think of the large language models that are the brains behind things like ChatGPT. Then comes the second stage, imagination. This is where we all go wild dreaming up the most ambitious applications, like fully autonomous AI agents that can do our jobs for us. But then comes the third, and you could argue the most important stage of all, implementation.
And you know what? We are already seeing the shift into that third stage. The big conversation has started to change from, wow, look at what this tech can do, to, okay, seriously, how do we make money with this thing? You can see it happening with giants like ByteDance, Tencent, and Alibaba. They're all rolling out their own AI tools, and they're not just for show. They're fighting for real paying customers.
So the really crucial point here is that this isn't the final chapter, not even close. In fact, it might just be the beginning of a brand new one, and maybe the most important one yet. So from this perspective, the bubble popping isn't the end. It's just the end of that wild imagination phase. All that hype, all that investment, it's the fuel that was needed to create the core technology in the first place. And then, maybe after the market cools off a bit, the real work, the implementation, can actually begin. And get this cycle's probably going to repeat itself over and over, with each new wave of technology pushing AI even deeper into every corner of our lives.
And that just completely reframes the whole debate, doesn't it? It takes us away from the simple yes or no question of, is it a bubble, and moves us to a much more interesting and, frankly, a much more important question. Now that the AI wave is shifting from pure imagination to practical implementation, who is actually going to win the race to build the applications that will define our future? You know, the AI news cycle, it's just this constant storm of hype, right? But what if the real opportunities, the big ones, aren't what everyone's talking about? Well, today, we're going to pull back the curtain. We've got venture capitalist Feng's playbook for 2026, and we're going to see where the smart money is actually going.
Okay, so to figure out where AI is headed, we've got to first get a handle on where we are right now. And honestly, the current chapter of this whole story is all about one thing: convergence. We're talking about a massive consolidation of power that's basically setting the stage for everything else.
And that leads to a pretty tough question, especially if you're an innovator trying to break in. Is the AI race already over? I mean, it's a scary thought, right? But when you look at the facts on the ground, it's kind of hard to ignore.
Look, the whole AI landscape has just completely transformed. What used to be a fun little playground for startups, yeah, that's now a battlefield for absolute titans. In one corner, you've got the US heavyweight, Google, and in the other, you've got this trio of Chinese giants, ByteDance, Alibaba, and Tencent, all fighting for the top spot. The walls are definitely closing in. So the big question is, why is this all happening so incredibly fast? Well, here's the cold, hard truth of it. If a new piece of tech doesn't fundamentally change how we as users behave, it just becomes a war of resources, a money fight. And in that kind of war, let's be real, the company with the deepest pockets, they're going to win every time. They can just throw cash at the problem until it goes away. And this brings us to the absolute core idea of this whole explainer. It's a rule, really, that separates the flash-in-the-pan trends from the real, game-changing revolutions. For now, let's just call it the habit shift rule. Think about the whole bike-sharing craze a few years back. That was a classic resource battle, right? Lots of cool innovation, but at the end of the day, giants like Meituan and Alipay just swooped in and absorbed the entire market. Why? Because our core habits, they didn't really change. Now compare that to TikTok.
It wasn't just another app, no way. It introduced a totally new behavior, that endless, almost hypnotic vertical swipe. That is a habit shift, and that's something the big guys just couldn't copy and paste.
And that, right there, is what we call a paradigm shift. When a new product literally rewires our daily habits, the old guard, they just get left in the dust. They're stuck in their old ways of thinking. So what about the current AI race? Well, for now, it's still just a resource battle being fought on massive server farms. It hasn't triggered a real paradigm shift, yet. And that yet is where our story takes a really interesting turn.
Okay, so if the giants are totally dominating this resource war, where does that leave the innovators? Where do they go? Well, this is where we crack open the playbook for 2026. Because Feng points to 3 specific doors that aren't just open, they are practically begging for someone to come and kick them down.
All right, here they are, the 3 big opportunities on the horizon. First, specialized AI chips. Second, vertical AI agents for specific industries. And third, a massive wave of AI-driven smart hardware.
First up, AI chips. See, as AI starts moving out of the giant cloud data centers and into our phones, our cars, our homes, the whole game changes. NVIDIA, they're the undisputed king of the server farm, no question. But this next wave of AI, it needs chips that are way smaller, cheaper, and that barely use any power. This creates a huge opening for a whole new generation of chip makers, a kind of next NVIDIA, but for the real world.
All right, on to opportunity number 2, vertical AI agents. We're talking about AI that's custom-built for one specific industry, like finance or healthcare. But here's the million-dollar question. Who's most likely to actually succeed here? Who's got the unfair advantage? Well, the answer, it's probably not who you think.
It's not the flashy startups with their perfect, slick pitch decks. Nope. It's the established, maybe even kind of boring, mid-sized companies. The ones that are already the backbone of their industries.
So why them? Simple. They are sitting on an absolute gold mine of data. We're talking years and years of structured, real-world business data. And that data acts as the ultimate reality check for an AI, stopping those weird hallucinations dead in their tracks. So for these companies, AI isn't some crazy gamble. It's like putting a supercharger on an engine they've already spent decades building.
And that brings us to the third opportunity, which is, well, it's arguably the biggest one of all. This isn't just about a new product category. This is a full-blown industrial revolution. Welcome to the age of smart hardware.
Now, to really get what's coming, let's take a quick trip back in time to Japan in the 1980s. They figured out this incredible trick they called electronification. Basically, they took the old mechanical world and plugged it in. So pianos became Yamaha keyboards. Ticking watches became those cool Casio digital watches. And those big, clunky cameras, they became simple Canon point-and-shoots.
But here's the thing. That upgrade pretty much stopped at just adding electricity. Today's upgrade is about adding a brain. Think about it like this. Going from a broom to a vacuum cleaner? That's electrification. But going from a regular vacuum to a robot vacuum that can actually see and dodge the socks you left on the floor? That's intelligence. It's the huge leap from a basic rice cooker to a full-on cooking robot that knows exactly how you like your food. And this creates this incredibly powerful feedback loop, a flywheel. It works like this. You sell a smart device. That device is really just a sensor, collecting data from the physical world. That data then trains the AI, making the product even smarter. A smarter product, of course, sells more, which means you gather even more data. And this cycle just spins faster and faster, leaving all your competitors in the dust.
So, how do you actually win in this new race? It's really the classic story of the tortoise and the hare. The winners aren't going to be the ones making these big, flashy, revolutionary leaps. Nope, the winners are going to be the ones who take slow, steady, deliberate steps forward. Incremental wins.
I mean, look at the iPhone. It's the perfect example. It didn't just appear out of nowhere in a flash of genius. It was the next logical step from the iPod, which itself was the next step from the MP3 player. Each generation built on the habits and the tech of the one before it. Real, lasting innovation doesn't happen in a vacuum. It evolves.
Okay, so how do you take all of this and actually put it into practice? Let's boil everything we've talked about down into a simple, clear map for navigating this next wave of AI.
Here are the 3 key takeaways for your 2026 AI map. Number 1, it is not too late. We are still so early in this. The starting gun has basically just fired. Number 2, incremental innovation wins.
Especially in hardware, slow and steady evolution beats flashy revolution every single time. And number 3, understanding what people actually want matters more than the technology itself. Real-life insights? That's the new scarce resource.
You know, Feng puts it perfectly. He says, technical supply is becoming accessible. Subtle insights into life and human nature are the real scarce resource. It really says it all, doesn't it? The big battle is shifting from the server farm to the human heart.
So let's leave you with a question to think about. Look around your own world, your own industry. What data out there in the physical world isn't being captured by the internet today? What real-world problems are just sitting there, waiting for a brain to be added? Because the answer to that question? Well, that could be the seed of the next great AI company.